today we want to kind of unpack some of the tools in your investor toolkit, some of the knowledge that you've picked up over the past 30 years. Let's start at a market level. When you're trying to read the mood of the market, what are some of the indicators that you're looking at most? How much do you pay attention to, like technical, sentiment, macro data, the like?
Well, they're probably three really critical areas
okay.
to focus on. To be completely serious, I never leave home without my chart pack. So I'm forever checking the temperature of a market by its technical health.
Okay.
And I'm talking there about long-term charts. I want to look at long-term support lines, long-term resistance lines, and on stocks and indices and commodities.
What's long-term?
Well, long-term for me is 5 years plus.
Okay.
And frequently, in the case of when the markets were melting down during COVID, I remember sitting back looking, saying, where is the method to this madness? Because markets were really, really selling off. And I pulled out a long-term chart of the ASX 200 and a long-term chart of the small ordinaries. And lo and behold, the market had pulled up on long-term support that had been in place since 1993. And every major meltdown, and with that I'm referring largely to the meltdowns of back in 92, 93, the dot-com meltdown in 2000 and the GFC in 07, 08 into 09. Every major meltdown had pulled up on this big, fat, well-defined support line cutting across those two indices. It was almost like for me, it was an epiphany. I saw it and thought, markets aren't going any lower. Markets have pulled up on support. Time to buy.
Wow.
Not time to go to cash yet. If you read the popular press, you're being told to cash up. COVID's hit. It's going to be bad. Technicals certainly looked after you. Look, I look at a whole bunch of oscillators and indicators as well as long-term charts. I look at the Kopok indicator. I look at the Williams percentage R oscillator. I like to have these in the background. I look at those. I also look at sentiment. I need to measure sentiment, and I want to know about professional positioning. Are the big professional traders in the Australian share market getting short the major stocks? I need to know whether, if I'm getting excited and getting long and they're getting short, am I wrong somewhere here?
And how are you getting that information on what the big institutions are shorting?
Yeah, well, I'm in the very privileged position, Alec, where I can access Bloomberg data and I can see how short interest looks. I haven't gone onto the ASX website to see whether they publish short data, but it's quite critical to know how the positioning is. So I rely on positioning data to know whether I'm swimming against the stream or in fact I'm on trend. I need to know about, and I talk to a number of private client stockbrokers, and so would many of your listeners. And they're a great barometer as well, and they can tell you whether their clients aren't doing much, or they're not backing IPOs yet, or they're all sitting in cash. I like to listen to that to tell me whether, in fact, again, am I swimming against the stream? I look at credit spreads, and that's the difference between long-term money, 10-year money, and 2-year money. And some of the US published credit spreads, such as the BAA less 10-year bond spread, that tells me about risk and riskiness. And right now, credit spreads are quite narrow and tight. There's not a lot of angst. Confidence is high.
Which is funny, and we're going to talk about that in a second. But I think for people listening, just pin that the idea that confidence is high at the moment.
Yeah. No, we can certainly come back to that. And I look at a sentiment indicator that you can get on the website. You can jump online and get it, which is the AAI survey published every week in the United States, and that's freely available. And that tells you whether large institutional investors are bullish, excited, or bearish and anxious. And then finally, macro data. Well, we're all absorbing macro data, and that gives us a bit of a feel for contemporaneously what's happening out there. So I use all of these tools, and I never forget to look at them. They're always front of mind when I'm approaching a day as a trader.
These are things that you're checking daily. Maybe not everything you've just listed, but this is a daily process for you to check in the pulse of the market.
It certainly is. Yeah. Absolutely. And in fact, better than just checking in, it's also notating. It's keeping it like a diary, keeping a book and just noting down your observations.
Wow.
And just,
geez, I'd love to get my hands on. Like you have a physical book that you're writing in.
Yes,
I'd love to read
so
it. Yeah.
It's just documented so that you're forever referencing back to things and notes and comments. You need to be methodical.
Yeah.
Are you doing this at the start of the day or just throughout the day? What's the
start of the day? Because so much of it is international data.
Yeah.
So I get it down, and I regularly present the findings on a weekly basis to our team.
Oh,
So
wow.
we share what I'm observing and what we're seeing out there.
Have your team followed you, and do they all have their books that they're notating in as well?
They've all got their own books. I'm not exactly sure what goes in those books, but they have got books. They certainly also keep diligent notes.
Yeah.
But I pride myself in making sure that some of these macro indicators and these technical indicators are being observed and are being discussed. So that's my job.
Nice.
As head of our business, I need to be across that stuff.